Okay, we're live. Okay, Brandon, it's ganja time. Welcome everybody to Industry Reporter's next Superstock live stream. This is our first live stream of 2021. We have with us next Superstock, Icanic Brands, ICAN on the CSE, ICNAF. Over the counter, Brandon Koo is the CEO. And so Brandon, the company has had some tremendous progress since, they first debuted on our program. I think, was it October already? Time flies.
Yeah,
Brandon, how long was it?
Time's flying. Time's flying.
And now you actually, one of the things, as I recall, when you first came on, you were very focused on financial results, delivering financial results. I mean, you mentioned multiple times. I actually, this is like in my mind, is like strong. What is it? Margin expansion, margin. What's the 50% more over and over?
Superior gross margin profile.
Superior gross margin profile. And today you had some tremendous results today for the last quarter. So apparently, you're delivering. And so we're going to find out today. I guess we're going to see a bit of a presentation. We'll open up for Q&A afterwards. We got a lot of people in the audience, more people coming in right now. So for anybody that's watching, again, it's your questions that make these things special. So please, watch the presentation, and we'll open up for Q&A in about probably 15 minutes. And for anybody that's new to our program, our goal at Wall Street Reporter's next Superstock live stream is to bring you those stocks which have 10x to 100x upside potential. We've had a bunch of those in the past year, and we're hoping to have a bunch more in 21, and we're going to find out if Icanic Brands is going to be the next big winner. So, and again, these companies, they have three things in common. One, they're going after multi-billion-dollar market opportunities. Two is they have multiple catalysts in place for creating that massive shareholder value, and they're at a key inflection point right now, which I think ICAN kind of checks off all three of those. Definitely worth the financial inflection point. So, with that said, Brandon, I'm going to turn it over to you, and I'll see you in about 15 minutes.
Sounds great.
For Q&A. Okay.
Yeah, thanks for having me. For anyone who's kind of new to the story, Icanic Brands, that's who we are. So what do we do, right? Icanic is really focused on California first, right? Our belief is that we wanted to compete in the largest, most competitive market in the world with the most discerning customer. To give the audience a better idea of how big the market is, in 2019, there were $3.1 billion in California sales alone, and that's only in the legal market. In addition to the $3.1 billion of 2019 legal sales in California, there was also another $8.7 billion illicit sales, right? So you add those two up, and you're talking about almost a $12 billion market just in California alone. And so for us to kind of compete and own the largest market with the most competitive landscape and the most discerning customer, was really kind of, our large focus. We really wanted to kind of take our expertise and really kind of be at that category leader. And I think, as you'll see, we're well on our way. So obviously some additional stats. It's no surprise the cannabis market as a whole across the U.S. is growing rapidly. In the most recent election, another 4 states passed for recreational purposes. Another state passed for medical purposes. So, the good thing here is that, everything is working. States, more and more states on a yearly basis are approving cannabis for recreational use, all with the eye towards, what we think will be a landmark event, for the industry and really for our company as well, which is that federal legalization that, is drawing closer and closer. Again, the stats will show that this is one of the largest and fastest growing industries, obviously with a lot of industries across other landscapes right now kind of slowing down due to COVID. Ironically, cannabis is even growing faster, right? And so it's a great industry to be in. And obviously, again, focusing in California, it's a huge market opportunity for us. So again, investment highlights, who are we, right? We are California focused. We have a strong brand portfolio. Ultimately we think that, brands, just like in other industries, when the market matures, brands will be the things that win. As Jack mentioned, for us, we think about the industry and our business a little different than most. We are focused on gross margins, really having that superior gross margin profile. We know that if we can accomplish this task, it'll set the company up very well for the future growth, but always keeping in mind margins, first and foremost. We also have statewide distribution within California. We're in 375 plus locations, which gives us a tremendous advantage, not only for our existing products, but for future acquisitions, future product launches, a real benefit to have in-house. We are focused on technology and automation, right? The audience may ask themselves, how do they get to this superior gross margin profile? What makes them different? For us, we believe that technology and automation is going to be a huge factor, just as we've seen in a lot of other businesses, and it's no different, or will be no different in the cannabis space. And so our dedication early to automation has allowed us to really achieve those higher gross margins than our peers. Then the last highlight for us is just, we are very well positioned to be very aggressive from an acquisition standpoint heading into 2021. 2020 was a year to build our foundation, and 2021 is going to be a year for what we think will be explosive growth for us. So we are, again, California focused. What does that look like for us? We have a 13,000 square foot cultivation facility located in Sacramento. We have a almost 3,000 square foot manufacturing facility located in Oakland. We're currently in the final stages of building out our new manufacturing facility, which is about 20 miles north of Oakland. The footprint will almost be 2.5 to 3 times the size. So we're very excited to really increase our manufacturing capacity. We also are working on bringing on our second state-of-the-art automation pre-roll machine, which I'll get into later, but that will be housed in our new facility up north. We do have a legacy footprint in Nevada as part of an acquisition that we made previously, kind of laying the groundwork for expansion geographically. Was important for us. In Nevada, we have a 4,000 square foot cultivation facility. We have a 10,000 square foot ability to expand, which we're very excited about as we kind of continue to grow. On that same site is also a 3,000 square foot manufacturing facility. It's all housed on a 1.5 acre piece of land that we actually own outright, and it has become very strategic for us, again, as we look to expand beyond California, as we prove out our model in California. We have identified Nevada for a host of reasons that will be kind of the next stepping point for us. Here's kind of a look at some of our existing brand portfolio. Ganja Gold, which is obviously one of the category leaders in the infused pre-roll space, gives us tremendous visibility, gives us a tremendous competitive advantage. As you can see, we were awarded one of LeafLink's fastest growing companies. Obviously a huge honor for us. Again, competing in a very competitive space in the largest market is a real testament to the team. Another brand that's under our portfolio is Taylor's. Taylor's focuses on the volume side of the pre-roll space. It's actually where a lot of the transactions, most of the transactions happen within the kind of that volume value space. And so we created a brand to kind of leverage our existing manufacturing capabilities, our existing distribution, bring that to the market, again, targeting kind of a gross margin profile of above 50%, while delivering, over-delivering in value to the end consumer. So how do we get to, this idea of a gross margin profile, a superior gross margin profile? For us, our target is 50% gross margin across all SKUs. We do that based on our 3-pillar system, right? So 2020 was a year to really kind of harden and develop this model, the system that allows us to look at our business a little differently. Those three pillars are our technology, our sales platform, and our vertical integration model. And again, all of these pillars lead us and give us the ability to really target and achieve that 50% plus gross margin profile. So technology, as I mentioned earlier, technology is a huge component of our business. We think that the only way to kind of really increase margins down the road will be through technology and automation. Industry after industry, you've seen this time and time again, with cigarettes, with bottling, with any industry you think of, it's really kind of that automation and technology that really make a difference. And so for us, we were committed to that very early. A few years ago, we actually partnered with some leading engineers out of Silicon Valley, to really tackle what we saw was a real bottleneck in the pre-roll space, and that was pre-roll manufacturing, pre-roll automation, right? And so we partnered to develop a one-of-a-kind automated pre-roll machine that basically completes the process A to Z. We launched it in Q2 of 2020, which was very exciting. And again, for us, automation and technology all drives towards the idea of allowing us to scale more efficiently, quicker, while still maintaining our margins, right? So not only are we focused on the pre-roll manufacturing component, but we're focused on every asset of our business, every aspect of our business, where we can infuse technology, we can infuse automation, reduce our need for human labor, human capital, and really position ourselves well for what we think will be a very exciting 2020 or 2021, and a very big year of growth for us. The second pillar of our business, which is a huge aspect of what we do on a daily basis, is our sales platform. Currently, we have a 7-member sales team, 5 across the state, 2 doing inside sales in our Oakland headquarters. And for us, the sales platform, the sales structure, infrastructure that we've created is one that allows us to not only reach our end consumers, right? It allows us to touch our retailers on a daily basis, working with them to better understand, how our brand is doing, how our portfolio is doing, but also stay on top of other concepts and ideas that are coming to market. So it really gives us that direct kind of touch point with our retailers and then our end consumers. Not only does it position us well by giving a statewide distribution, which is unique for California, it allows us to also position ourselves well for the future, right? So as we look to grow, both by way of acquisition, by way of launching new house brands, targeting different segments of the market, having that in-house sales platform and sales team will allow us to quickly distribute our products across the entire state very quickly, right? So for us, it's a huge competitive advantage for us and a real pillar of our business. Kind of gives you an idea of kind of the total addressable market and obviously some of the accounts that we're in. The last kind of core pillar of our business, and again, all working towards what our goal is, which is our superior gross margin profile. The last pillar of our business is our vertical integration, right? So earlier in 2020, we brought on our own supply, our own cultivation site, and so the original thought with our vertical integration model was we wanted to lower the cost of our raw flower inputs, right? So we were spending anywhere from $1,700 to $1,900 a pound for a premium indoor flower prior to our push towards vertical integration. With our own cultivation, we were able to get our cost basis down to anywhere from $1,000 to $1,100 per pound, which is almost decreased the single largest input of our COGS profile by almost 50%. So it was a tremendous cost savings for us. It allowed us to kind of work towards that 50% plus gross margin profile. The thing that we didn't necessarily anticipate, and a lot of things, a lot of people didn't anticipate in 2020, but one of the things that we didn't anticipate was the rising cost of flower, right? So now, during kind of 2020, that same pound of premium indoor flower that was previously $1,700 to $1,900 a pound was now going for $2,500, $2,600, $2,700 a pound. So we were able to, what was originally meant as a cost-saving mechanism for us, we were able to transition that and sell any excess bulk flour that we had and use it as a profit center, right? And so, what was interesting was, while the cost at the bulk level in the wholesale market increased dramatically, almost 50%, the cost of finished goods at the retail level did not increase, right? So for the brands that were not vertically integrated, they absolutely got crushed, right? And so for us, what was initially meant as the cost savings for our own products, actually ended up having significant benefits, both from a revenue perspective and then just, our ability to kind of compete, in the market. So, again, 2020 was a year for us where it was really meant to kind of establish, build our foundation, develop this 3-pillar model that are all, working towards the idea of having superior gross margin profile. 2021, as I have alluded to, is going to be a year of big growth for us, right? And so, how do we get there? How do we achieve our goals for 2021 and beyond? The first is obviously continuing to grow in California, right? And so we have a category leader, which is a huge competitive advantage for us. We're going to continue to grow our Ganja Gold brand. We're going to be launching new SKUs. Our half grams or minis are kind of coming to market here in the first half of 2021, which will be very exciting. Just to give the audience an idea, most of our products are basically 1 gram units, right? 1 grams only make up 29% of the California market. So, with the launch of our half grams or minis, we're able to touch and go after a huge segment of the market that we weren't previously going after. We'll also be launching multi-packs, right? So as opposed to just selling 1 gram single serving units, we're going to be launching multi-packs. Again, to give the audience, a bit of a behind the scenes, 1 grams only make up single servings only make up about 50% of the California total addressable market, right? So just those 2 launches will provide, a tremendous benefit for us. We're also going to be further integrating our Taylor's brand across our sales platform and across all of our locations. That brand has been very well received, again, targeting a different segment of the market, but one that is growing quickly and is a big market in California. We'll also be launching additional house brands, looking at other segments of the market, right? So because we have our own sales team, because we have our own sales platform, we're able to identify segments of the market that are underserved and bring products, brands to basically fit that need. The second kind of component or key driver for us in 2021 is going to be our brand acquisition strategy. So, when we think about acquisitions, we think about them a little differently, right? We are looking at, brands that, are doing $250,000 to $500,000 a month in top line. They may be a bit distressed because their margin profile is upside down. Their SG&A might be too high, causing them to kind of lose money. For us, those opportunities are very interesting because we have our own vertical integration model. I can replace their supply chain and replace their cost of goods overnight by bringing them into our gross margin profile. I'm also not concerned about geographic footprint, knowing that I have a sales team and sales platform across the state. So some brands that might be heavily focused on Northern, some might be heavily focused on Southern. Those opportunities are quite interesting for us because we can really embed them into our overall platform and give them statewide distribution immediately, which will significantly increase our ability to kind of grow top and bottom line. And our third component is obviously our growth outside of California, right? And so, as I mentioned, Nevada will be our second home. We already have the vertically integrated footprint within Nevada, and are currently just in the final stages of working towards, furthering, the brand portfolio within the state. We think that it's a big opportunity. Obviously, there's a lot of cross-pollination between California and Nevada, and we think that it's the next logical step for us. So yeah, 2021 will be a huge year of growth for us. But I think as Jack alluded to, and as the message has been time and time again, when we first came on, the goal was we were going to build our foundation, get our margin profile in place, and our promise was we were really going to deliver both those types of items and also try to grow, right? And so part of why I'm here today is to kind of outline our most recent quarter announcement, which we're very excited about. This is the quarter that ended on October 31st. And as you'll see here with the quarter one, this is the quarter one fiscal performance for us. We're very excited, right? It was a tremendous quarter, obviously in the face of COVID and all the challenges. Revenue of $2.65 million was up 45% from that same quarter from the previous year, which was a huge accomplishment for the team. Not only were we able to grow our top line significantly, but we also had a gross margin of $1.21 million, which was a 58.6% increase from that same period the previous year. So again, not only were we able to grow top line significantly, we were able to grow our gross margin significantly. That gross margin of $1.21 million was actually a record for us from a gross margin percentage, equating to almost 45.7%. So again, as the audience will remember, it was only a few quarters ago that our gross margin was roughly 16%, right? So in a short amount of time, with the improvements that we've made, with the commitment that we've made towards our 3-pillar system, we were able to dramatically improve gross margin while still growing top line from the previous year. Obviously all of that boils down to an adjusted EBITDA of over $160,000. Again, from the previous year, that's the previous quarter from last year, we had a negative $1.5 million of EBITDA. So that's almost a $1.7 million EBITDA improvement. It was a huge quarter for us, and one that we're extremely excited about. And then, for a lot of the audience, they're concerned about cash and cash on the balance sheet, and we were able to increase that our cash position dramatically as well. So again, for us, Q1 fiscal was a huge quarter for us. We were able to grow that top line significantly, almost growing it by 45%. Gross margin, which was able to increase by 58% from the previous year. And then again, what we've said kind of time and time again is this company thinks about our business a little differently, right? We are heavily focused on our gross margin, our superior gross margin profile. We know that without that foundation, we don't really have a future. And so for us, 2020 again was a year of building this 3-pillar model, really kind of driving towards our superior gross margin. And I'm proud to say that the team has done a fantastic job in just a few quarters, going from roughly 16% almost 45 or 45+% gross margin. So we're very excited, and we think that we're just on the cusp of some pretty unique growth. So Jack, I'll turn it back over to you.
Okay, hang on a second. Let me just put this. Okay, Brian, you can hear me?
Yep.
Okay, everything is good. Okay, fantastic. So we have some very interesting questions in the audience.
Yep.
I'm going to get to those in a second. We've got actually a bunch of questions. I want to just 2 things, Brandon. For anybody, again, we probably have a lot of new people here, and if you can just, explain, kind of your focus on automation. You mentioned the machines that you have that do the pre-rolls. So Can you explain exactly how they work? What's the advantage? What is your unique competitive advantage? Because there might be other guys who have various degrees of automation, or they do they roll by hand. What advantage does your technology give you?
Yeah, so pre-rolls in general are still rolled by hand, right? So it's a very labor-intensive process requiring a huge amount of let's call it minimum wage employees, right? And so if one thing that COVID has taught us that we've had to adapt to is you can't have that same manufacturing footprint that you used to have before, right? And so you've had to spread out your employees, you've had to take all the necessary precautions that COVID has brought. And so because we were able to commit to technology at a very early stage, it allowed us to reduce our human footprint dramatically, right? So we don't need the 50, 60, 100 employees to do the same amount of work that our technology can do. So it's been a huge win for us, right? From an automation perspective, effectively what we're doing is we're think of it as a canning or bottling line, right? You're putting in the raw inputs. In this case, it's cannabis for us. It's going through the automation process and then spitting out a finished unit, right? And so with that, it allows us to grow rapidly. It also allows us to work towards having that technology go effectively 24/7, which is obviously much tougher with a traditional human labor force. And then, I think for us, the technology just doesn't stop at the pre-roll machine. We're also working on all sorts of grinding technologies and other technologies that basically automate our process, make us more lean, and allow us to achieve and improve our gross margin profile.
Okay, and okay, so in terms of branding, again, everybody in the industry is focused on the premium. They want to get into the premium branding, all that good stuff. Now you mentioned acquisitions. Are you looking at picking up other brands right now? Like, because you've been discussing acquisitions like from day one almost. It's been a topic. So, do you have a pipeline of acquisitions right now?
We do. I think again, 2020 was a year to kind of get our house right. More recent acquisition LOI that we announced was we're actually acquiring the team behind the technology, the automated pre-roll technology, and so we're very excited to have them, soon under our umbrella, right? Again, having a team that's built one-of-a-kind equipment for Tesla, Johnson & Johnson, Genentech, it's a huge win for us, right? And so as we really further double down on our commitment to automation and improving our margins, having them as a part of our larger organization will be a huge win. And then, to your point, we have a large pipeline of acquisitions that we're currently looking at. And I think, 2021, you'll see us be pretty aggressive now that we have the parts and the pieces in place, to replicate, our same gross margin profile, in acquisitions that we make.
Okay. We got a couple of questions here, or I guess, yeah. So Bob's saying he bought a pre-roll at a dispensary in Michigan. He says it looks like it was rolled by machine. Are there other competitors doing this? And then he says it looks like yours, and he got tired of looking at it, smoked it up. So.
Yeah, there are folks that are trying to replicate it. I think that what you haven't seen is kind of real category leaders in the most competitive markets that have utilized technology, right? And so as you think about the makeup of a pre-roll, right? A lot of companies or a lot of folks can just try to grind the inputs to dust, right? And that doesn't lead to a great smoking experience, right? And so because we have a premium brand, a connoisseur brand, the consumer is used to a level of quality that they could basically do themselves, right? And I think if you think about the cigarette market and the history of cigarettes, people wanted to roll their own cigarettes, but it wasn't until they found the same quality at the same price where they were able to kind of convert, right? And so, our focus is delivering a quality product that the end consumer is going to want to smoke time and time again. And we think that us, cutting our teeth in the most competitive market, that being California, gives us a huge advantage as we look to kind of expand beyond, right? So sure, there are companies that are trying to replicate using technology, but at the end of the day, it really comes down to the quality of the output, right? If the quality of the output is dust, the consumer is not going to adopt that like they would, and so we're very proud that our consumers really haven't noticed a difference whether we're using technology or rolling them by hand, and to us that's a huge statement.
Okay, so that's really a key distinction in terms of there might be other people who have various degrees of automation. Essentially, there's always people who do a lot of things which are similar, but there's always certain leaders because of the quality, whatever it is. And essentially, you're saying that essentially your machine, and you mentioned in previous live streams, your kind of technology is able to adjust for different strains, adjust for like a lot of different inputs,
Yeah.
which can to produce the quality.
Yeah, that's one of the things that we kind of learn throughout this kind of 2-year process is, every strain of cannabis has a different consistency, a different makeup, right? And so in a world where the strains are constantly changing, right? There's hundreds, if not thousands of strains. They're mashing strains together, creating new strains. But the reality is every strain is different. Even the same strain grown at a different time of the year in an indoor environment is different, right? So for us, having that technology that is flexible enough to handle the various inputs while still delivering the consistent same output is a huge was a huge challenge for us, but a huge goal that we've accomplished that we're very proud of, right? And so I would challenge any cannabis company that at the end of the day you have to kind of constantly change strains because that's what the consumer demands, right? The consumer is looking for new strains every day, every week. And so for us, we have to kind of keep up with that competitive landscape. And we have to have a technology that can handle all forms of the various inputs while still delivering that same consistent output.
Okay, so that's a key distinction. Okay, so 2 Mil is asking, says Las Vegas has the worst unemployment, few tourists. Planet 13 had a record third quarter. Now you're in Vegas. You have a location in Vegas. So when the economy opens up in Las Vegas, demand will be huge. Can you scale fast enough to meet the growth in Las Vegas when it reopens?
Yeah, I think knock on wood, our company's in a very fortunate position where we are always struggling to meet that demand, right? We can't produce enough products, which is obviously a good problem to have to meet that consumer demand. Nevada is a very interesting state. I think if anything, it shows us that in many ways, cannabis is recession proof, right? The stat the viewer mentioned about, record unemployment, while Planet 13 is still having, third quarter record revenues, is a real testament to the opportunity, right? And so, in many ways, we're very excited to fully bring our brand portfolio to the state. Again, we've been very mindful and cautious of making sure that we're doing it the right way. Sure, we could be in the state tomorrow with our entire brand portfolio, but if we don't have that superior gross margin profile, it won't do us any good, right? So we're taking a bit more of the conservative approach in the sense that we want to make sure that we have all the pieces in place before we really launch our entire portfolio. But the good thing is that we have the manufacturing facility in place, we have the cultivation, we have the sales relationships, we have the demand for our products, and so it's now only a matter of time, which will really kind of be a first half of this year, 2021, kind of milestone for us. But we will be bringing our full brand portfolio to Nevada, and we think it'll coincide well with the demand for cannabis in the market.
Okay. Here's a great question. So Cannabis Store is asking, if you make an educated guess, when would you say ICAN is going to $1? Part two, wait, Brandon, part two, will it be when revenues from quarter with mini sales come out? That's not for a while?
Yeah, no crystal ball here. I think, what our focus is and what we can control is our performance, right? We know that, we said we were going to achieve a gross margin profile that was superior to most, and I think as our most recent quarter financials indicate, we've done that, right? We also said that we were going to also focus on growth, right? And I think the almost 50% growth from the previous year was a good indication of that growth. So our goal is to in some ways keep our head down and continue to do the great work that our team is doing. As far as the minis go, I can tell you that it won't be long before those hit the market. We're currently in the final stages of R&D on them, and just making sure that they meet the same quality standards that our consumers are used to. So yeah, we're very excited to launch those here in California very soon, and we think that'll provide a tremendous growth opportunity for us. And listen, we can only control what we can control, but we think that the market will really appreciate what we're doing.
So Brandon, now that you have you've moved into the larger facility, which is what basically double the size. You have 2 machines going. When are these things going to show up in the financial results? When can we see? I mean, are revenues going to double? Is everything going to essentially double? Because your production is going to be double.
Yeah. So we're hoping to be in our new facility. The second machine is basically ready to go. We're hoping to be in our new facility here in the next month or so. Obviously, COVID doesn't do construction or city approvals.
California, right? And you get California.
Yeah. It's one of the drawbacks of obviously being in a COVID environment. But again, everyone has to face them, and so to us, it's no different. But yeah, I mean, I think in some ways, having a second machine can certainly help to double output. We actually think that it can go beyond that, right? We're working towards obviously a larger manufacturing footprint, which will allow us to have a larger team, right? Which we think will be important, but also going towards a second and third shift, right? You have to remember right now we're only operating on a 1 8-hour shift, utilizing one piece of technology, right? So now we bring on a second machine, we bring on and working towards a second shift, and even a third shift down the road. We think that this will provide us that tremendous manufacturing capacity, which will ultimately lead to big growth. But again, we're kind of working with what we have in our existing facility with our existing manufacturing capacity, but we think that'll change very quickly, and we'll be able to see that growth. And so from a financial perspective, really kind of looking at Q2 of 2021 as really kind of seeing the fruits of a lot of our labor.
Okay, so in theory, I mean, because I'm just doing the math, you double capacity, now you can go to 3 shifts, 2 machines. So is that basically 6 times revenue? I mean, the potential for revenues basically becomes 6x.
Yeah, I mean, I think if you think about the capacity perspective, right? Yes, by doubling bringing on a second machine, that significantly helps, and then working towards a second shift and a third shift, it provides us with a tremendous platform and tremendous opportunity.
Okay. Brian is asking, with the recent mergers of other Canadian cannabis companies, have there been other companies approaching you looking to take advantage of your technology advantage?
Yeah, I think for us, we've tried to kind of stay head down, right? We think that we have so much low-hanging fruit ahead of us, right? With our technology, with the great discussions that we've been having with other brands that we can actually acquire. A lot of our goal is to kind of be the acquirer, right? With our platform that we work so hard to bring to market, this 3-pillar system that really allows us to achieve that superior gross margin profile. For us, we really want to take advantage of that and kind of follow through on some of these discussions that we've had with potential brands that are looking to kind of fall under our umbrella and doing it in a way that is very accretive for shareholders.
Okay, we get a question about, hang on, okay, so Full Metal Josh is asking, I think you kind of touched on this, right? Is there going to be decriminalization at the federal level?
I think
it's one of those things that's out there always, right?
Yeah,
it's not affecting business.
Yeah, certainly no one has a crystal ball, but I think if the most recent events are any indication, right? Another 4 states passing rec, another state passing medical. The U.S. is moving towards federal legalization, right? It's not a matter of if, but when, right? And so, again, for us, we know that when the market opens up on a federal level, just like with wine, right? You can buy and grow grapes for wine anywhere you want in the U.S., right? But there's always a premium for Napa Valley wine, right? And so we think that as the market opens up, it'll actually be more of an opportunity for us because people will always want California cannabis, right? And so we think that the market
California gold.
Exactly.
Gold.
Once once federal legalization happens. But that being said, for us, we have to operate in the current environment that we're in, right? And so if we were building our business solely to succeed based on this federal legalization that might happen in 6 months, a year, 2 years, 3 years, we'd be doing our shareholders a disservice. So while we think that's a huge milestone for the industry, we're finding a lot of success operating under the current current landscape, which is great.
Okay. Brian's asking, do you plan to sell gummies, edibles in the future? Also, does ICAN sell, or if not, do you plan to sell?
Yeah, so we have an edibles brand, a legacy edibles brand that we acquired as part of the Nevada operations. That company is currently selling in the state of Nevada. We're looking at, do we bring that brand to California? Do we look at acquiring additional brands or other brands in the state? But again, for us, I think it's really, does it fit our model, right? Are we able to deliver that 50% plus gross margin target? Does it leverage our existing resources and 3-pillar system to really allow us to achieve our goals? And if the answer is yes, then we're going to look at it every time, right? And so for us, it's really just thinking critically about what makes the most sense for us and our brand as it relates to California. But yeah, we do have an edibles brand that's currently selling in the Nevada marketplace today.
Okay, Brandon, let's wrap up. So in terms of investors watching this right now, what kind of what are the key milestones that they should be looking for in the in the coming quarter?
Yeah, so I would keep an eye out for our product launches, right? Again, we are launching SKUs that are targeting a huge component of the overall market in California, right? I would also say to keep an eye out for news as we look to kind of grow both organically and acquisitively. Acquisitions are going to be a huge component of our overall growth now that we have our foundation in place. And then I would also say to keep an eye out for as we expand our facility, as we bring on additional machines, our various business models, we're going to bring to market like our white label service.
Okay, so you have organic growth, and you did mention, I picked this up, acquisitions will be a huge component of growth.
Yep.
Okay,
yep.
So that's the thing to look for. Now that you have kind of the foundation established, you're ready to sort of get have the rocket take off.
Yep.
Okay, fantastic, Brandon. Last question, our favorite question here at the Wall Street Reporter. In your opinion, top 3 reasons why investors should consider Icanic brands right now?
Yeah, so I'll start off with the big one, right? California is the largest market in the world with the most competitive landscape and the most discerning customers, right? And we have a category leader. We have a proven track record in that state, which is huge, right? It sets us up for not only continued tremendous growth in California, which in 2019 was almost a $12 billion market, legal and illicit. But then also as federal legalization happens, it allows us to kind of expand and leverage that footprint. The second one, as I mentioned, is, we are now well positioned for exponential growth. Again, 2020 was a year for us to get our foundation in place, really build towards that superior gross margin profile. 2021 is going to be a year of we think will be explosive growth, both organically and acquisitively. And so that's the second component. And then the last component is just, this company thinks about the industry differently, right? We're heavily laser focused on margins. We've included a tremendous amount of automation and technology, and all of those things allow us to kind of scale effectively and profitably in the future, right? And so those 3 reasons for us are what we're very excited about, and we're excited for a great 2021.
Fantastic, Brandon. Thank you for you're again our first presenter of 21. So we're looking for big news. We're looking for a big big increases in the stock price in the coming weeks and months. So Brandon, thank you. Thank you everybody in our audience, and we'll see you on the next live stream.